Most people don't lose money in the stock market because they picked the wrong investment. They lose it because they made the wrong decision. The truth is, beginners don't fail due to lack of opportunity, but because of simple mistakes that could have been avoided. One emotional choice, one rush trade, or one hot tip can destroy months of progress. The market doesn't forgive, and it doesn't care how new you are. If you're planning to invest or already started, these mistakes could cost you more than you think, unless you know them first. 1. Investing without a plan. The fastest way to lose money. One of the biggest mistakes beginners make is investing without a clear plan. They hear that investing is good, so they rush to put money into the market without knowing their goals. Are you investing for retirement, a house, a side income? Your plan decides what you invest in, how long you hold it, and how much risk you take. Without a plan, every rise and fall in the market feels scary, and that often leads to panic moves. A smart investor starts with a clear purpose, a time frame, and a basic strategy, not just excitement and hope. 2. Chasing hot tips and trends. Instead of knowledge, a lot of beginners lose money because they follow hype instead of doing research. Someone online says a stock is the next big thing, or a friend claims a coin will explode soon, and people jump in without understanding what they're buying. Trends are fun while they last, but most crash just as fast as they rise. The safest way to invest is to know why you're putting money into something, not because people are shouting about it, but because you understand what the company or asset actually does. Good investing is about thinking, not guessing. 3. Ignoring risk and putting too much in one place. New investors often put all their money into one stock, one crypto coin, or one type of investment they feel confident about. But even strong companies and markets can drop without warning. If all your money is in one place, one bad event can destroy your whole investment. This is why diversification, spreading money across different assets, is so important. You don't need to invest in hundreds of things, but you should never depend on just one. Smart investors protect themselves first and profit second. The key lesson: don't build your whole financial future on a single bet. 4. Letting emotions control. Buying and selling. The market goes up, people get excited and buy. The market drops, people panic and sell. This emotional cycle is the main reason beginners lose money. Fear and greed take over logic. Many people buy when prices are high because everyone else is making money, and sell when prices fall because it looks like things will get worse. But the best investors do the opposite. They stay calm, think long-term, and stick to their plan no matter what the news says. If emotions make your decisions, the market will control you instead of you controlling your money. 5. Expecting quick riches instead of long-term growth. A common beginner belief is that investing should make you rich fast. But the real power of investing is not speed, it's time. The people who build real wealth aren't flipping stocks every day. They are holding quality investments for years, letting compound growth work in their favor. When beginners expect fast results, they get frustrated, trade too often, or chase risky, get-rich-quick ideas. That usually ends in losses and disappointment. Investing is not a lottery ticket. It's a slow-building machine. If you stay patient, you let time do the hard work for you. Thank you for watching. These 5 mistakes are the reason so many beginners lose money, but now you know how to avoid them. Investing isn't about luck or speed. It's about having a plan, managing risk, staying calm, and thinking long-term. If you found this helpful, please hit the like button and share it with someone who needs it. And don't forget to subscribe for more valuable insights that can help you grow your money the smart way. More simple, powerful investing lessons are coming soon. Stay curious and stay informed.